he's also a member of ISPAC, and he's a founder, or he's a founder of an organization called GMK. So he's here today to speak to us about taxes. He's here today to enlighten us about taxes. And as you can see on the screen, he's ready to take up this flight. So welcome, Mr. Gerard, and we are ready to learn today. Thank you, and take it up.
Thank you, William. I think I'm clear to everybody.
Yes, you are.
Before I start, let me try to share what I'm presenting now. William, I've also shared with you the slides. Probably in case I have some strategies, you can also share from your head. Can you confirm whether you have received it in your email? Yeah.
Yes, I can see I've received.
Okay. So, William, can you just share on your head? I think I'm getting some challenges.
Okay, let me, just a minute, I'm downloading it.
Okay. But now let me just, as we wait for William to proceed, I think I am very delighted to be in this forum to discuss tax matters. My name is CPA Gerard Eduku. I'm a tax specialist. I'm a tax partner of a company called GMK Accountant LP, where we do accounting matters. We have accounting department. We have tax. We have advisories, training, and all other areas relating to accounting. I'm also a member of PFT, Public Finance and Tax of the ISPAC. PFT is the tax body that deal with the tax issues in the accounting professions. So I'm feeling the right to be here, and I hope the session will be very interactive. I only guide you, and then I expect a lot of robust engagement so that we can make this session very fruitful. Maybe to start with, I was liaising with William on the best areas we can cover relating to tax, because tax is very broad. It's very broad, but in this forum we have already brought the general tax principles that we have in this country. So otherwise, we have got other advanced stages like transfer pricing. We have international taxes. We have the issues to do with a double tax agreement, which are more advanced, and maybe we can organize on another forum to give that. So generally, we look at the simplicity of the tax system in Kenya and the tax compliance. Now that most of the participants are in business operations. Go to the next slide, William. So on the first slide is about the importance of the tax compliance. The tax compliance entails abiding to the tax laws. It involves determining one tax liability, filing the respective returns, and making payment on time. It's about the issue of to be tax compliant is ensuring that you are compliant with the tax laws, so that you avoid to avoid penalties and interest that are normally charged for non-avoidance. Avoidance of additional costs. So if you don't comply, what are the consequences of non-compliance? Of course, there will be penalties and interest for late filing of returns or non-filing of the taxes. We also have the TCC. I think most of you are aware about the tax compliance certificate. That nowadays, for you to get a tax compliance, of course, your company has to be tax compliance. And of course, it is going to save on resources of following up the TCC. You spend a lot of time trying to reconcile with the KRA officers. Sometimes you have to incur some costs to get the TCC. So generally, it is very, very important to be tax compliant to avoid additional costs and unnecessary costs. So move on, William. In terms of the implication for having business, there is one of the participants who had an issue with should I operate as a limited company or as a sole trader? And you're saying if the business is trading, then the responsibility is on the owner of the business, and they should ensure that they declare all the income and file the taxes on time. And of course, failure to file this return will actually open can of worms with the taxman. So we have the most is the tax audit and assessment. I don't know the process of tax assessment. It's going to disrupt your way the way that you run businesses. You need to avail documents for 5 years or so. We still have to deal with the issues of objection and sometimes even proceed to the tax tribunals. And these are all unnecessary procedures. And of course, there will be penalties and interest if you don't comply with the taxes. So, William, move on, please. So, in Kenya, Kenya is about income taxes. And under the Kenyan law, under the Income Tax Act, so we have the taxes that are defined by the Revenue Authority. And some of the tax that we have in this Kenya is pay as you earn. We have the value added tax. We have the monthly rental income. We have income tax, that is corporation tax and individual tax. We have the installment taxes. We have the issues of withholding taxes and turnover tax, including capital gain tax at minimum. So generally, when we talk of the Kenyan tax system, these are the most taxes that are applicable to most all the businesses and which have got punitive tax implication if you don't comply. So move on. So let's start with the pay as you earn. Pay as you earn under Section 3 of the Income Tax Act. This is a tax that is charged on employment income. That every employer is mandated to deduct and remit taxes from the salaries and wages and all benefit arising from employment. So benefit, we are referring to cash benefit or non-cash benefit. Cash benefit, this is money, the salary that we normally get. There are other benefits which are deemed to attract pay as you earn. For instance, if you get a car allowance or housing benefit, or including meals and accommodations, including any benefit that you get from the employer, then it is most likely subject to pay as you earn. And we are saying that if you look at the current bulletin from KRA, the pay as you earn generated 455 billion in the financial year ending 2021. Financial year ending 2021, starting 2021 to 2022. So it's actually a major component. in the whole revenue perspective of KRA. And you are supposed to pay the pay as you earn on 9th of the following month. Currently, any person earning over 24,000 shillings, then you are subject to pay as you earn. And this should be very clear. It does not including the cash flows. So if cash flows are earning above 24,000, they are subject to pay as you earn. So under the Kenyan, and from 2015, of course, you process the pay as you earn on iTax, and then you ensure that it is paid appropriately. And currently, from effective 1st of January 2022, these are now the bands. We graduate. We normally use a graduated rate of tax to determine the taxpayer. So if you earn per month, for the first 24,000 shillings, you would apply 10%, and the next 8,332, you use 25%. Any amount in excess of that 2,000, then of course now you apply the highest tax bar. So that is how we determine the PRC1. And we're saying it's all employment income, including cash and non-cash benefit. And of course, if you don't, the consequences, if you don't comply with the law, of course, there's a late filing penalty of 10,000 shillings for the company and 2,000 for individuals. And there is late payment penalty if you don't pay on time, 5% of the principal tax. And of course, there is interest 1% per month. So if you don't comply with the PRC1, of course, there is the interest will keep accumulating until the amount is paid in full. So generally, is one of the components that affect many businesses. You may employ someone full-time or permanently or casual, but that should be the guiding laws on the PRC1. Okay, kindly take us, William, please move on. Then how do we tax service gratuities? Lump sum payment. For instance, employees are exiting or on a retirement. Then what is the basis of charging service gratuities? A service pay is an amount of money paid to an employee by an employer whose contract has come to an end under Section 35 of the Employment Act. So how do you tax that? Because occasionally, once an employee gives you a notice to go, sometimes you just tell the account finance manager, can you determine the amount that is payable? You give him a whole check. That amount is subject to pay as you earn. What happens is that amount, for instance, if you're paying 500,000 shillings to an employee for the service gratuity, then they will say that you spread that amount backward for 5 years. You spread the amount backward for 5 years and determine the pay that he needed to have paid for the 5 years. And of course, before you pay him the amount, then that pay as you earn must be deducted and paid over to KRA. So this will happen to the service gratuity or any lump sum payment that an employer is giving to the employee. So you spread backward for 5 years, and then you apply the pay as you earn net, and then you pay net to the beneficiary. So we can move forward, William. So we have another minister, the value-added tax. That's the VAT. At the moment, we have got so many tax laws that have been passed by the Treasury relating to the VAT. Because VAT, it generates, I'm checking the amount of revenue that the government happened to correct for the financial year ended 2022. For this year, the correction amounted to 244 billion from the VAT. And it reflected a growth of 24% compared to the previous year. So it's also a major component. And VAT is applicable worldwide. Actually, in South Africa or in all the OECD companies, there is VAT. And VAT is the VAT charge on the supply of taxable goods and services. So if you're supplying taxable goods and services, then you are liable for VAT under Section 3 of the VAT Act. Who is liable for VAT? Any person or company that expects to supply affordable services over 5 million or more in a year of income. If you anticipate to supply affordable goods of 5 million and above, then you are due for registration for VAT. The VAT is due on or before 20th of the following month. So you have to further return and pay the taxes. And in a month where the taxpayer has no transaction, then you need to fill in a new return. And if you don't comply with the VAT law, because there is a 10,000 penalty for companies and 2,000 for individuals, and there is 5% for the principal tax and 1% interest if you don't comply with the law. So generally, the VAT, it is tax. It is the difference between, maybe this session could not allow us to look at the examples, but it's the difference between the VAT that you have collected from your client. You deduct the VAT that you have paid your supplier. The difference is what you account for to the government, and you pay on the appropriate date. So how much have you served your supplier? How much have you collected from your? How much have you collected from your client? Sorry, how much you have paid your suppliers? Then the difference is what you need to pay to KRI. And we are saying down there that there is the issue of the ETR. I think this is my good audience. I think this is very clear about the ETR, that once you generate any invoice, then it's under the law that you have to issue an ETR. It's mandatory. You have to, and if you don't, then there is punitive penalties and interest. But I want to insist on the new regulation, the VAT regulation 2020, that has introduced the teams. I think you must have heard about the teams, tax invoice management system. It is a device that is going to be to replace the ETR machine, and the taxpayer has to comply with effect from 1st August. That is next month. That we are now going to use ETR. We now start using the teams. What is the difference between the ETR and the teams? Teams is a tax invoice management system. It transmits data on time. It's a real time. It's a real time transmission of data to KRA. That means once you generate teams, that transmission will go to KRA, and the KRA will have record. It will hit your iTax directly, such that there will be no issue of we will not have more issues of missing traders or the issues of inconsistency. I think you must have accepted about that, the inconsistencies in the VAT, which KRA are generating often and lead a lot of time wastage. This one is automated transmission on time to KRA system. They can check how many invoices you have issued for a particular day. They can check the amount that you pay to the suppliers. It's to enhance compliance, and of course try to make it more efficiency in terms of administration of taxes. So this is a machine that is being acquired currently, and it's mandatory that 1st of August, then all the business should have installed the teams. So the impact is it even have a pin checker before even you transact with the supplier. You can always confirm whether he's registered with the KRA and all that. So probably on that we can engage more, because we also have a partnership with a supplier of the teams who can be able to, of course, give you more advice on that. William, kindly you can proceed. So currently we have VAT rates. We have the normal, we have the zero rated rate. Currently is being is fading away. It's fading away from the KRA. We have a lot of KRA has a lot of pressure from World Bank that we need to correct more, and that second schedule is fading away because everything is almost now being portable. but there are still some items there which are their export of goods. Of course, services with effect finance bill 2022, export of service is now vatable, something that we are trying to push with the treasury to see whether was an error or something. EP said we have the private bodies and public persons who are zero rated. Then we have 8% for petroleum oil. And of course, now we have, under the new law, we have the gas, we have the LPG is also now in 8% rate. And we have the general rate, which is 16% for goods and services that are vatable. So maybe under that VAT, as I leave that area, the question is that if you're less 5 million threshold, is it mandatory for you to register for VAT? That is a very common question that many businesses will come up with. But of course, under the law, KRA is not mandated to force registration if your turnover is not more than 5 million in a year. Okay. So William, kindly you are my assistant. How is the VAT worked? How do you work on the VAT? I think I've mentioned about this, is the VAT that the output VAT minus the VAT that you have purchased, then you pay the difference. And we are saying if input tax exceed output tax in any month, then you have a right to claim for a refund from KRA. So I think this is a minister in the house about the VAT refunds and the tax refunds. Currently, I think we have over 30 billion pending refunds with the revenue authority. But of course, you can, it's your right to claim a VAT refund. And when you claim a refund, of course, you expect KRA to do a compliance check. They need to confirm the legitimacy of your refund. They might do some audit just to confirm on the legitimacy of what you are claiming. But it's something that can be done because refund are still processed even today. Maybe some taxpayers will hesitate because of the imminent tax audit that might come, but it's something that's worth pursuing if you have a genuine credit in your VAT return. Okay, so move on. So I think I mentioned about the issue of ETR compliance. So you can currently there are those ETR that can be upgraded to the teams. You don't have to buy. You need to consult. You can upgrade your ETR to comply with the teams. But ensure that you are compliant effective 30th of July 2022. Okay, move on. Can move on. Then we have got another type of tax. I think most affecting most businesses. If you have a rental property, which property is subject to MRI or monthly rental income. So under Section 6A of Income Tax Act, it introduced this tax with effect from 2016 January, and the tax rate is 10%. Who is liable for MRI tax? Persons or companies that have residential rental property earning 288,000 a month, or that is 24,000. That is 1.25 million in a month. So at the moment, anyone earning, if you're generating not more than 15 million rental income in a year, that is 1.25 million, then you are obliged to be under the monthly rental income. And for a month where no rent was collected, then you still have to file a new return. And we're saying that monthly rental income is the final tax. And if a company or individual has no other income apart from that income, then you only file a new return. So that should be very clear. That if you have a rental property, it might be semi-permanent or permanent, resident or non-resident. So you have to, this tax is obligated it's an obligation to pay this kind of tax. And we're saying it is 10% of the gross rent of the rent collected. It's not the rent, is not the end receivable. It's how much, if you have 20 units and 15 are occupied, then you pay for the 15 occupied houses. 10%, no expenses around. That should be very clear. You don't allow any expenses. If you have a mortgage loan, if you took a mortgage, you have caretakers, that one you don't claim as an expense. You only do it on the gross rate. This is for people with the properties. And of course, if you don't comply, there's a late filing penalty. The higher of 10,000 for companies and 2,000 for individuals. But of course, there is interest for non-compliance. So generally, that is MRI. It is subject to the people with the, maybe the question should be, what if probably you had taken a mortgage to build the house, and you feel that you'll be, if you do your general account, the profit or loss account, you'll be in a loss position. It might be possible, especially for a new property. Then you can apply to the commissioner to operate a normal regime. Normal regime is a case of where now you're allowed to do the accounts, you declare the rent income, you claim in expenses, but is upon approval by the commissioner. Right? That's clear. I think that's to be clear. Then move on, Kaiden. Then we have the individual. We have the businesses. What taxes are due for businesses? And I hope my audience is entrepreneurs. Most of us, the way I was updated by the facilitator. But what incomes are subject to income tax? Under Section 3, subsection 1, in accordance with this act, a tax to be known as income tax shall be charged for the year of income upon the income of a person, whether resident or non-resident, which accrued or derived from Kenya. Any income that have been derived from Kenya, then of course it is subject to income tax. And it can be classified as individual income tax or companies. So you can operate as a sole trader, or it can be a body corporate. Both of these, or it can be even a trust or partnership. Then all that is subject to income tax. And under income tax for the individual, a tax charged annually on the individual, whether resident or non-resident, for the income derived or accrued from Kenya. So at the advanced level of the term residence, I think residence, if you look at the Finance Act, the one that was gazetted on July 5th by the president, it concentrated so much about the residents. Because at Section 3, at Section 2, it defines who is a resident. It's a person who has a permanent home and you have been in Kenya for the year, or you don't have a permanent home and you're in Kenya for 183 days or 122 days. It has been a lot of ambiguity about the issue of the residents. But now the act is very clear. It has clearly defined who is a resident. But in general, we are saying that if you're a resident, then you are liable for income tax. If it's a business, you have to do the accounts. You have to do the tax computations, you have to pay taxes as normal. And of course, we are saying the rate for individual, they are determined by the Finance Act every year. And of course, you have the rates that are applicable with effect from this year. So William, please, you can proceed. So for individual, this you use once you get your profit, once you get your tax of profit, then you're going to use those rates per year to determine your tax liability. For the first 28,000 per year, you get by 10%. On the next 100,000, you multiply by 25%. And any income above 388, then use that percent. This is a modification. If you can recall, my audience, that previously up to 21 December, we had 5 BAD. We had a BAD for 10%, 15%, 20%, 25%, and that percent. But of course, now when we have the rebate, it means that the bar has been extended, and therefore the implication is that you pay high taxes. And every resident person is entitled to a tax relief. Tax relief, the impact of it reduces your tax liability. And currently we have a personal relief of 2,500, 2,400 per month as a relief, and there is also insurance relief for self, spouse, or a child. And including the Finance Bill 2021, NSSF has also been taken as a relief. So you can always deduct. The impact of a tax relief is to reduce your tax implication. William, okay. Then we have the corporation. These are the business taxes. If you have a limited company, a trust, or a cooperative society, then how do you pay tax? You pay tax using the rates. There's residential rate, that percent. There's non-residential for company, that's 7.5%. So for non-resident, they pay at a higher rate. And for companies that are incorporated locally, they pay at that percent. And of course, this is after doing the tax computation, taking the profit for the year, allowing expenses, capital allowances, and all that. Corporation tax return, you need to do a return within the 6 months after the accounting period. So, like for instance, last month was the deadline for filing the 2021 return. And if there's any tax that is due, you need to pay by the end of the 4th month, after the accounting period. If you don't file the return on time, there's 20,000 penalty and 5% for the tax due. And of course, there's a penalty for 5% of the tax due and interest 1% per month. So generally, that is the businesses that make profit. If you don't make a profit, of course, that loss will be carried forward perpetually until you recoup the loss. It's only when you're in a profit position. William, please can you move forward? Then how do you pay taxes? This is a very important area. How do you pay taxes? Because many taxpayers will all construe or deem or assume that the taxes are paid after you do the accounts. Under the Kenyan law, under the Income Tax Act, we pay the tax as the year of income progresses. We pay tax by installment. And if you don't pay tax by installment, of course, there'll be penalties for underestimation. So what happened in the course of your year, you need to prepare your management account, ensure that your management account are up to date. Then you pay taxes quarterly. 25% of the first quarter of 25% on 6 months, 25% on 9 months. And of course, you pay the final installment by 20th of the 12th month. So this is an advanced tax. If you wait to do the account after the year has come to an end, you'll be imposed with very heavy penalty if you don't pay tax by installment. So we pay the tax as the year progresses. Withholding taxes, this was also a very good question from the audience. The issue that you wanted to cover. Withholding taxes, these are the taxes that are deducted at source. When you're making certain payment, then you need to withhold tax. It can be prepayment or a final payment. The person making the payment is responsible for deducting and remitting to KRA. Once you withhold tax for someone, then you need to remit it to KRA. Examples of the income subject to withholding. What income should you withhold? When you're paying the service providers, when you're paying management or professional fee, when you're paying the audit fee, when you're paying commissions, then you are liable to withhold tax. Move on, William. When you're paying consultancy, these are tax consultants, these are per division consultancy. When you're paying agency fee is commission. If there's a principal-agent relationship, then it is subject to withholding tax. When you're paying commissions, ensure that we withhold at a particular rate. What need to be what the document that you need to keep for agency? You need to have a commission agreement in place. Then you need to have invoices, and of course you need to deduct at the appropriate rate. Move on, Titus, William. Then these are the rate, withholding tax rate. When you are paying dividend for resident and non-resident is 10%. Qualifying dividend is 5%. Interest on BRI instrument 25%. Fees payable to insurance brokers is 5%. You can move on, William, Kadre, Aman, I'm sorry. Then when you're paying royalties, 5%, for non-resident, 20%. When you're paying management fees or professional fees, it's 5% and 20% for non-contractual fee. So you find that when you're paying non-resident, you withhold at a higher percentage compared to a non-resident. But this is, you need to comply whenever you're paying professionals, whenever you're paying for these services, you need to withhold at this particular rate, deduct and limit to KRA by 20th of the following month to ensure that you're compliant. William, proceed. Withholding Tax Act as a credit at the end of the year can be used to reduce. In case you have a credit, of course, the withholding tax that has been withheld by your client is a tax credit. And of course, you reduce your tax liability by offsetting it against whatever you are supposed to pay. Responsibility of a person making the payment. What is your responsibility? You need to compute and deduct withholding taxes at the applicable rate. You need to remit withholding taxes by 20th of the following month, and you need to maintain proper records for any inspection. KRI, when they come to audit, they require you to give the professionals rangers. They need to get the contracts. They need to get the invoices, so that they legitimate or they authenticate the accuracy of your deductions. If you don't comply with the law, of course, we say there's a penalty of 5% and 1% interest. Can move on. Issue of advance tax. I think many entrepreneurs have pickup lorries, commercial vehicles. Then there is at a section 12A, there is advance tax. The tax paid before a public service vehicle is registered. And this according to the land schedule. And the advance tax that is paid is a tax credit. It's an advance tax. So when you are doing your annual taxes, you need to deduct the withholding tax that has been, the turnover tax. This is on, remember, it was a bit controversial when it was introduced, but it was to cater for informal sector. Informal sector, if you are below the VAT threshold, we are saying that the turnover tax is chargeable on the gross sales of the business. It will replace the presumptive tax. The effective date is 1st of January 2020, and the turnover tax is paid by the person whose gross turnover from business is not more than 1 million and does not exceed the 5. So it's to cater for the small businesses that don't meet the VAT threshold. And we're saying it does not apply to the person with the business below 1 million, does not apply to rental income and the management fee. So move on, William. Still about the turnover tax. It's the final tax. Once you pay the TOT, it should be the final tax. There's a penalty for 1,000 per month if you don't comply, and there's 1% interest until the amount is fully paid. The CGT, the capital gain tax, this is also administered in the House under the new Finance Act 2022. The amount has been increased from 5 to 15%. But of course, you're saying this is a tax. It is a tax paid on the net gain after sales of a land or building. In case you sell land or building, of course, net gain, how much have you, the sales proceed, you deduct the amount that was the cost of acquiring the land, including the incidental cost, and then you use the 5% to determine the amount that is going to be payable. With effect from July this year is now 15%. This amount is due, and then there are those items that are exempted from CGT, income that is taxed elsewhere and all that. So these are the items that are exempted from CGT. Move on, William. The same, I think that you can, I will shall share the slide with you. Maybe you can familiarize with those other processes. My good audience, I think it was brief, and I take it back to William for further guidance, and I hope the session was interactive. Thank you.
Awesome, thank you. Thank you, Mr. Gerald. We really appreciate you. And we are happy that you are here today to enlighten us about taxes and also to make sure that, yes, we know which tax to pay and which tax we must comply and at what time. So it's now that time that we go to Q&A. Let me check on the chat line. There's no question. So if you have a question for Mr. Gerald, kindly unmute and just ask a question. Just unmute yourself and ask the question. Or if there is anything that you feel like Mr. Gerald has not handled as per your expectation, you can just let us know so that we proceed.
Good morning. I have a question on the turnover tax. It's like it had a controversy and it was not clear whether it was withdrawn or whether it's still applicable. Can you please clarify? Thank you.
Thank you, Catherine.
Can I come over, William?
Yes, please.
Yeah, thank you, my colleague. I think turnover tax is quiet, but it's still there. What was suspended by the High Court, is the minimum tax. Minimum tax was the tax that was to be applied on the minimum tax that any person can pay. So minimum tax is in the court. We are waiting the ruling from High Court, but turnover tax, it is still applicable. What happened with the turnover tax is that it didn't suit many businesses because remember also the turnover, it also limits you to compete with other businesses which are under the VAT. When you have to make tenders to the government, you must be a VAT registered person. So maybe the issue is about the extension and the limitation that many taxpayers feel that is not very competitive compared to the VAT, but it is still applicable, and though on a very low scale. That's what I can comment for now.
Thank you. Thank you, Mr. Gizuku. And we have another one on the chat. Says, while filing for TOT and you don't have the purchases receipts.
Another TOT was only based on the turnover, on the receipt. It actually was together for Wajiko. When you sell Sukuma Wiki, you can easily tell that in a day that you make 1,000 shillings and you can pay tax on that. So you don't need to keep purchase document. You don't need to maintain any expenditure document because you base it on what you correct, on the revenue that you have corrected for that particular month. Hope that's clear to the member who had requested that.
Favored Jambly, I hope that is clear, and I hope you've been answered. Catherine, are you satisfied with the answer? Or there is something you still need clarification on?
Just a clarification to find out the quietness. How do we know what is applicable, what is not applicable? Where do you get that information?
come up clear on applicable.
You said it is on, but it is quiet. It's there are issues in court. So the portion that is on, that is supposed to be paid, how do we find out the information?
Thank you, participant. I think I need to make it clear. What is in the code is another type of tax that was to be introduced with effect from 2021 called minimum tax. There were some business owners from Together. They went to court, and that minimum tax that was to be introduced with effect from 2021 was suspended, pending the court ruling. To date, the court has not ruled on its implementation, but of course, it's not being applied now. But the turnover tax, it is still applicable. Turnover tax is still applicable, and we're saying anyone with making a turnover of 1 million, between 1 million and 5 million, then you can opt to be under the turnover tax. So it's not mandated. You can still remember it's not compulsory for you to be under TOT. You can still register under the VAT. But what I'm saying, and if you're under the turnover tax, then if your turnover is between 1 million and 5 million, you can be under the turnover tax. And under this regime, you don't require to keep, you can keep for your own consumption, but under the tax law, you don't need to keep any expenditure cost or receipts or the purchase cost. What you need to keep is only the revenue. Maybe the bank, the cash receipts and all that. I think that should be very clear. The turnover tax I'm saying is quiet because many people have not embraced to be under the TOT. And the reason I'm saying because of when you're making tenders, the government require you must be VAT registered. And of course, many people in this category are not tax compliant. So that should also come into the mind. Many people, Wajikos, most of them they are not tax compliant. We have that in the informal sector, but generally the turnover is there and they operate. Thank you.
Awesome. Thank you. I believe, Catherine, you are now good. Anybody else with a question?
Thank you.
Good. Welcome, Catherine. Anybody else with a question or something you want to be clarified?
Yes, I have a question. Hello, can you hear me?
Yes, Paul, you are clear.
Okay, my name is Paul. Thank you, Mr. Gituku, for your time. I just wanted to ask, for example, if my earnings is just from the business, is it okay if I put also my expenses, personal expenses, as part of the business expenses, or I have to pay myself salary, and then from the salary is where I can deduct the taxes, or what happens in such a case?
Thank you, Paul. I think it's a very good question. I think when you're in business, especially SMEs, sometimes you find yourself in mix. Expenses, is it business or is it personal? Under the law, under the business law, under the Income Tax Act, Section 15, it says that when you're accounting for your business, it's only the expense that are incurred wholly and exclusively to earn your revenue. It must be related to the business. Under Section 16, it shows the expenses which are not allowable. You cannot bring in the personal expenses because they are not relating to the production of income. But I get your predicament because once you are an SME, the most likely you find paying the school fees using the business money, or probably withdrawing money from the business for your personal, for your living, cost of living. So my advice would be, if that is a scenario, is personal expenses are not allowable. But of course, you can draw a salary. You can draw a salary. You can probably, depending with your cash flow, you can have the minimum, you can have a nominal salary. But of course, if you're using the motor car, this is now tax planning. If you're using your car to go and see your client and other businesses. The mileage, you can use the mileage claim as part of your as a part of your revenue. Because for instance, you go and visit the client, you fuel the car, the fueling, accommodation is also allowable expenses. So they are personal, but since they are incurred for business purposes, they can also be taken as allowable expenses. But mostly do a salary, try to claim mileage expenses to ensure that the tax money will not you are not at risk to a tax assessment. Thank you, Paul. I hope I've come up clear. Yes.
Thank you, Mr. Githuku. Paul, I believe your question has been answered.
Yes.
Very good. Thank you. We go to another question on the chat line. This is from Deborah, and she's asking the question for a friend. And she says, what happens if you sell land worth 1 million? Are you expected to pay turnover tax?
Okay. Nice question. Thank you, Deborah, for the question. I think I need to make it clear because here we are mixing two tax heads. So if you sell land one-off, then the tax you are probable to pay is the capital gain tax, not turnover tax, because turnover tax is a business income. You're operating as small business. Business will include selling of merchandise, selling, printing, photocopying, all that. That is one that we are breaking. That is a business. Business is different from capital gain. If you sell land, then you are subject to capital gain tax. And this capital gain tax, then I think we have just said that you pay by 50. But if you look at the law very clearly, if you have sold land of 1 million, the capital gain tax is not applicable. I think the minimum, I need to confirm, there's a minimum threshold for it to attract turnover tax. So Deborah, selling land is issued to the capital gain tax, a different tax from turnover tax, which is due to the businesses. I hope that should be clear. Thank you.
Good. Thank you, Mr. Githuku. Is this a comment or a question? How to file withholding tax for an individual consultancy? So Gloria Corio, are you asking a question?
Yeah, William, I think I have understood Gloria issue, how to file withholding tax for an individual. When it comes to withholding tax, there is the person withholding. The person withholding is withholding for many people, service providers. Assume you are real estate. We have consultants, we have accountants, we have valuers, we have engineers, we have got we have security companies in place. So you as the withholder will withhold all those people using the appropriate rate. And then once you withhold, then you need to file a return. That return, you're going to get the PIN number of the service providers, and you go to iTax. When you go to iTax portal, it will guide you on how to file the tax that the tax that we have withheld for people. Once you file that withholding taxes, it will go to the individual service provider. So that is not your withholding tax; it is for the other person withholdee, who is going now to enjoy that as advanced tax when he's doing the annual returns. I think that is how I've understood Gloria's concern. Thank you, William.
Awesome. Thank you, Gloria. I believe your concern has been answered correctly, and you are satisfied. So I believe it's about time, because we usually do this for 1 hour. and we started about 7 minutes past 7, and it's now 5 minutes past 8. So 1 hour has just elapsed, and I believe today we really got enlightened in matters taxes, and I want us to really appreciate Mr. Gerald for sharing his wisdom and his knowledge with us, because yeah, there are so many gray areas, and I believe today they are now clear. You can now see them clearly, and you now know which taxes to file and when, you know, because that is very important. So I just want us to say a big thank you to Mr. Gerard, and thank you to our mentor, Mr. George Washuri in absentia. We appreciate him because yeah, he went all the way. He went out there and brought us somebody who has broad knowledge on this, who is doing this on daily basis. And in case you have any challenge or any challenge in your business in matters tax, you know, you can always let me know so that I can share with Mr. Gerald. He's ready to assist any place. By the way, he's one of our consultants in matters tax as Optiven Group. So he's also a business partner in terms of working with Optiven. So Mr. Gidoku, we really appreciate you, and we say a big thank you on behalf of all the mentees and also on behalf of our mentor. So team, it has been a great morning. It has been an enlightening moment, and we just want to say a big thank you to each and every one of you for tuning in and being here in good time. So this session is officially adjourned till next week on Thursday. Thank you. God bless you.